Okay, it is Wednesday, July 26, 2017. We're going to review some of the trades that we've taken today with the trade copier, but we're going to start off here with the dollar. This is the US dollar index. This is the daily time frame. We come back to this chart just about every day. I also operate a private chat room for my students and subscribers so that way I can review any potential trades that are setting up and also review trades that I'm in or trades that I've taken and then explain why I took those trades based on my trading system. So what we're looking at again is the daily chart, US dollar index, and this is the IMP crown pattern that we've been managing and watching and verifying and confirming since the beginning of the year. So we go back over here to the beginning of the year. This is January 2017. Back over here to the left, we were in uptrend on 2016, and you can see that based on this is a IMP crown pattern. This is a IMP bear crown pattern. I should be more specific. And this is actually a technique that I developed. I teach this. I use this technique on a 1 hour chart. I'm sorry, a daily time frame, 4 hour chart, and sometimes on a 1 hour time frame. So you want to be really careful with it when you're using it on the really smaller time frames. It's much more reliable on a daily or 4 hour chart, and for obvious reasons. You can see that this is really helping me gauge and determine how long to stay into some of these trades, if the trend direction is going to continue, if it's still intact, or if things have changed. So far, we continue to see that the dollar is headed down here to our final target down here based on this move up here, this Fibonacci extension down here at approximately 91.78, 91.80. It might even stall at 92, somewhere right around there. Remember, these numbers aren't always going to hit exactly on the number. Very often, what will happen, though, is it will hit these numbers. It'll hit some of these extension targets because it's very predictive, very reliable. But it gives us a basic overall price target. Remember, this is a daily time frame. So if you're trading it, what I do is I take this information and then I execute the trades on the smaller time frame, like the 30-minute or the 1 hour time frame. It allows me to get in and out of the trades and make profits each day. That's what I would rather do. Of course, if you're going to do this, you can certainly use this to swing trade and hold on to these positions for, many weeks, many months. If that's what you would like to do, this technique, this system works perfectly for doing something like that for the larger time frames. But again, I use these strategies as confirmation on the larger time frames to confirm the trades that I execute on the 30-minute and the 1 hour chart. So again, so far, everything is still intact here on the dollar. With everything that we've seen, everything we've heard, all of the announcements, the meetings, the comments, the statements, the way the market's been waiting for these reactions, everything still remains intact in this downtrend here on the dollar. Still expecting the possibility of it reaching this extension target down here. So we start off with this new A high. So I teach how to do this. I teach these price swings, the price swing methods, how to confirm that the trend line has been broken. Just because a trend line is broken, however, with price doesn't necessarily mean that the trend shift or that's actually going to change and go in the opposite direction. There could be maybe support on the other side if it's in an uptrend. There's a lot of different things. So I teach exactly how to make sure that before you start expecting targets like this down here, and that to confirm that this is the new A, B, C price swing, the new price swing in the downward direction where the trend has shifted, in order to confirm that or to expect that, there is more confirmation than just what I'm showing here on the charts. You really need to go in and dig and assess and confirm that what you see as far as just with price breaking a trend line is actually going to continue in the direction that you're expecting it to. Ultimately, again, 92 on the dollar, maybe even lower. It wouldn't surprise me here. So this is the way 2017 has been working out for the dollar. We've got 2016 over here where you can see it was in an uptrend and it hit some of our targets over here to the left. And then at that point, it pretty much stopped. And with all of that, we can then assess what we expect with our trades on the 1 hour time frame. So let's go over here to one of the last trades that I closed with the trade copier. This is the pound dollar. Now the pound dollar, this is the 4 hour time frame. You'll notice that, again, 4 hour time frame on the pound dollar, we've got this A low, B high, bounce off of the 50% retracement on the Fibonacci tool. And then we've got the C turns into a new A, right, in an uptrend. So we've got a new A low once it takes out that B high, price over here. So we've got a new A low, a B high, a C, 618 retracement, bounce right off that 618 retracement. So we were into the pound dollar going long before FOMC. And very often, I know a lot of people would say, well, why don't you wait until after the news? That's one way to do it. If you're not sure about it, there's so many different ways to trade the news, and there's so many different ways to trade technically. But when there is this much confirmation and the market is expecting a certain outcome with, for example, FOMC, which it delivered. I mean, it gave the market what we were all expecting, and there wasn't really any surprises there with FOMC. So the chances of getting into, or the risk of getting into the trade and expecting it to work in our favor, were a lot better than if we were experiencing one of those events where FOMC, everybody's still saying, well, I'm not going to, open up any new positions or close my current position until we get, the information with FOMC, for example, because there are times when we get those particular events where the market isn't really too sure. In this instance, we were very sure, we were very confident, we had this technical information. We're looking here at the US dollar. All of this technical and fundamental information was all coming together at the same time. We also had another short-term A, B, C pullback and another bullish engulfing candle here on the 4-hour chart. And that also helped to confirm getting into the trade. And at that point, it was just a matter of waiting for FOMC to come out and deliver its statement as expected. And we used a 22 pip stop loss on this trade. And this was definitely a more than 2-for-1 reward versus the risk on this trade. So you can see how massive that move was here. And it as far as where it's going to go now at this point, it's a matter of waiting. So the way I prefer to do this when I execute these trades is to take profits. It's easy to hold on to some of these trades and to expect a little bit more. It's easy to close and take profits today, right now at this moment, in an uptrend or in a move like this, and then a few days later notice that the price continues and then look back and say, well, I wish I would have held on to it. Well, that's not how we're trading. That's not how to make money consistently. You don't want to wish. You want to be able to repeat the same pattern, the same basic principles, the same things that always produce results. So we're looking to make money almost every day that there's a trading opportunity. We want to take the trades that have the least amount of risk and the highest percentage of return in our favor when the market is most likely going to produce those events and that opportunity. Instead of waiting, for example, comparing this FOMC to previous FOMCs, again, where the market really wasn't too sure. In this instance, we were very, very sure that the market was going to deliver, or FOMC was going to deliver what the market was expecting. And then with all this technical information, along with a few other things, assessing the conditions, there was nothing wrong with getting into this trade. It was a technical trade along with the fundamentals. So there was technical signals and my technical setup according to my system that put me into the trade. But again, using a small stop loss like that versus the reward, this is exactly what we would have traded at any other technical opportunity. So again, going back to, so the question now is, and I get this question, I've had it for the rest of the day, but usually with a move like this, with a big event, FOMC, is what do we do now? Should I hold on to some of these trades because I've got some subscribers that are also executing these trades on their own, or they're learning my system, or they're using the trade copier. The trade copier, by the way, caught this trade here, and I manually execute this trade for you. I manage this position. I manage everything that's going on with the trade for you. But the next question is, should we hold on to the trade? Should we open up more positions? Should we, what do we do now? Well, we're looking at price sitting up here at resistance. So it's not to say that it won't go any higher. It certainly can, because again, we come back here to this dollar chart, daily time frame, and it looks like it's going to continue to move lower. However, each time we see new lows like this, especially new significant lows, we get a pullback, we get a pullback, we get a pullback. So the same thing could happen here with the pound dollar. We're sitting here at resistance on the 4-hour chart, so it could hit resistance and could pull back quite a bit. So again, that's one of the reasons why I closed lock-in profits. Otherwise we could sit here and end up being negative if it rolls halfway down or more, 3/4 of the way on this 4-hour candle, and we're going to sit here negative for a while, and that could move sideways right into Friday. I don't necessarily think so. Anything could happen here at this point, but we want to be careful. We want to lock in profits. That's the way I operate the trade copier service. So when I'm locking in profits and banking profits in my trading account, you're going to do the same thing when you're using the trade copier. That's exactly what you want.